New year, new me. 2022 is here and you have made the best decision of your life. You want to start investing. But how can you do that? How do you know what to invest in? How much money do you need to invest? And why would you even start investing? In this video, you can find the answer to your questions, and after the video, you can immediately start your investing journey. I remember when I first started to invest, I had no idea what to do and just randomly picked 3 companies that had a good looking website and invested a couple of $100 in them. Luckily, those investments have been doing pretty well, but that is still something I wouldn't recommend anyone to do. But what should you do then? There is just so much information available online that it is hard to know where to even get started with investing. So in this video, there will be only some basic information that will help all of you to start investing, even if you have no idea how to do it. The video will be divided into different chapters, so you can more easily check what we are talking about and skip through stuff that you already know about. Grab a pen and paper, hit the like button, and let's get started with the video. And just a quick disclaimer, this video is for education and entertainment purposes, not for investing advice. So why should you start investing? Well, let's first clarify what we mean by investing. Investing means that we are spending something, in this case money, for a benefit. In this context, investing means basically that we want to spend money on different assets that make us more money. Whether you want to quit your day job, become a millionaire, or just want to make a little bit more money on the side, investing is a great way to start your journey towards those goals. There are many reasons why you should start investing, but the most important ones are inflation, low interest rates on savings accounts, and the compounding effect. Inflation means that the money is losing its purchasing power because the prices are increasing. Let's say that you currently have $10 and want to go to the movies. In 2022, a movie ticket costs $9, so you are able to buy one ticket. Because of inflation, in 2023 it will cost $9.2, and again you are able to buy one movie ticket. But in 2030, one ticket will cost $10.5 and you can't buy it for $10 anymore. As you can see, over time the price of products will increase, which makes your money lose its value. Because of this, you shouldn't just keep all your money in a savings account. This leads us to the second reason why you should start investing. The savings account interest rates are so low at the moment that there is no point to keep too much money in a savings account. In the US, the average interest rate for a savings account is as low as 0.06% at the moment. You might be able to get higher interest rate from somewhere, for example 1.5%. This means that if you have $100 in your savings account, after a year it will be $101.5. This makes it seem like you're making $1.5, but the Fed's annual inflation target is 2%. And in 2021, the inflation rate was actually a lot more than that, 6.8%. So this means that if a product cost $100 during 2020, by the end of 2021, its price would be $106.8. As you can see, you could have bought the product in 2020, but now you are not able to buy it anymore. Instead of making $1.5, you actually lost your purchasing power. While it's not recommended to keep all your money in a savings account, make sure that you have some sort of an emergency fund so you don't have to sell your investments in case something bad happens. It is usually recommended to have an emergency fund that has enough money to pay for 3 to 6 months worth of expenses. This leads us to the third reason why you should start investing in 2022, the compounding effect. As Albert Einstein said, the compound interest is the 8th wonder of the world. Let me demonstrate with an example. Let's say that you keep that $100 in that savings account with a 1.5% interest rate. After a year it will be worth $101.5, so you have received $1.5. But the next year you will actually receive more money than that, because instead of having $100 in the savings account, you now have $101.5. So the second year you will receive $1.5225. Now this doesn't sound like much, but let's say that you invest $10,000 with an 8% annual return. After a year you will have $10,800. After 2 years you will have $11,664. But after 30 years you will have over $100,000. Thanks to the compounding effect, your money is making you even more money, and as you can see, time is critical here. If you start investing today, your profits will be a lot more than if you start investing in 2027. Because of this, the best time to start investing was yesterday. So why shouldn't you start investing in 2022? I get it, as a beginner investing might sound scary. I remember my mom telling me that investing is a waste of time and money and you should live your life now instead of losing your money in the stock market. Every time I speak with my family about investing, they say something like, yeah, you might make money now, but just wait, you might lose it all in the future. And while it is true that some investors lose their money, it isn't really because investing is so risky, it is because they don't know what they are doing or they are taking too high risks with their investments. But in this video, we are not going to teach you to gamble all your money, instead we are going to learn how to start investing with just a little amount of money and with just a little risk. But what if the market crashes? There are always those that speculate that this year the market is going to crash. And while it might be true, it is proven that time in the market beats timing the market. I started investing over 5 years ago, and back then a lot of people were already saying that the market will crash. Well, it still hasn't crashed, and even if it will crash, so far it has always recovered. It is true that history does not guarantee anything about the future, but let's say that you have two options. Option A, you can start investing long term and the market crashes at some point, but most likely will recover in a couple of years after the crash. Or option B, you are 100% guaranteed to lose your money in a savings account due to inflation. Which option sounds better? So, how do you start investing? Okay, so finally we are ready to move on to how you can start investing in 2022. You might wonder, how much money do you need to start investing, which stocks should you invest in, and how do you even make any investments? Well, you only need $10 to start investing, and as a beginner you don't want to invest in any stocks, you want to invest in index funds. This can all be done with an online brokerage, and it takes only a couple of minutes to get started. First, you want to find the brokerage that you want to use for your investments. Sadly, I can't give you a straight answer which one you should use, since it depends on where you live. But you can simply just Google top online brokerages that operate in your country, and the main point you want to focus on is the costs of the brokerage. Try to find a brokerage that has as low costs as possible, because all the money you spend on costs is away from your profits. After you have found the brokerage you want to use, simply just create an account and follow the instructions that they give you. The next thing you want to do is find out an index fund that you want to invest in. But what even is an index fund? Simply explained, index funds gather many different assets into one basket, so for example, instead of investing in just one company, you are investing in multiple companies. They usually try to match some market index, which is why they are called index funds. For example, S&P 500 index fund contains 500 of the largest stocks that trade on the New York Stock Exchange. I don't want to go into too much detail about this since it will just confuse you more, but simply explained, let's say that you have $100 to invest. You decide to buy two company A stocks for $50 each, so all your money is now invested in one company. Sadly, there is a global crisis that makes the company go bankrupt, which means that you have lost all your money. Now, if you instead invested in S&P 500 index fund, you would have invested in hundreds of different companies. During crises, some of those companies perform better than others, which lowers the risk of your investment. It doesn't matter if one company goes bankrupt, since there are still hundreds of other companies operating. Simply put, don't put all your eggs in one basket. So as a beginner, index funds are a great way to get started. The reason for that is the fact that you can start with just a few dollars, the cost of the index funds are very low, and the risks are also lower than with individual stocks. Try to find an index fund that diversifies well and has low costs. For example, Fidelity Giro Large Cap Index has $0 costs, and Vanguard S&P 500 ETF has 0.03% costs. The lower, the better. With many online brokerages, you can make the investments automatic, so you only have to spend a couple of minutes to choose which index funds you want to invest in, make monthly payments automatic, and then just forget it for the rest of your life while the money keeps on growing. I won't go into different investments like stocks and cryptos in this video, since those are a great way to lose your money as a beginner. However, after you have gotten started with index funds and start to learn more about investing and how easy it actually is, you might want to start using different methods to analyze different companies or try riskier investments like cryptos. But let's be honest, it is proven that index funds outperform the majority of those funds that are actively managed by professionals. Of course, we all want to believe that we are better than others with our investment decisions, but in the end, it might be just better to stick with index funds and remember that time in the market is the most important thing. However, I still recommend you to learn more about investing if you're interested. It never hurts to know how different valuation methods and assets work. I'll leave you a couple of book suggestions in the description that you might want to check out. So let's summarize as easily and quickly as possible how you can start investing in 2022. First of all, you don't need a lot of money, you can just start with $10. You want to find an online brokerage that has very low costs and offers different index funds. After that, you have to find an index fund that you want to invest in. Again, costs are important, Try to find an index fund that has very low costs, if any, and diversifies into many investments. There are thousands of index funds available, and it might be hard to choose one, which is why S&P 500 is often recommended, but you can choose others too. Then you just have to buy that fund, and if possible, you can automate your investments so you don't have to think about them at all for the next 30 years. I hope you found this video helpful, and if there is still something that you want to know more about, make sure to ask me in the comments. I'll do my best to answer all the questions. Have a great 2022 and best of luck with your investments. I'll see you next year. Bye!